Good morning, students. Welcome back to the session on advanced accounting. So today we continue on AS18. As regards AS18, we discussed about a couple of related party relationships. We'll continue on those related party relationships and quickly doing a recap of what was all about AS18. This standard deals with the related party relationships, related parties transactions, related parties balances, and this standard is all about disclosures. Nowhere in the standard there is discussion regarding the recognition or measurement. And we also further discussed that this being a very important topic, but as regards the transaction, whether it is taking place at the arm's length or not, there is no discussion on this aspect in the standard. This standard only says that whatever be the value of the transaction, whether it is at arm's length or not, we need to disclose it, provided the transaction is taking place with the related party. Now there are certain types of related party relationships which this standard covers. A couple of them we discussed, so we'll now further continue on that part. Related party relationships. One we discussed was about the entities which are having control over the reporting entity, which may have joint control over the reporting entity, which may have significant influence over the reporting entity. And other than entity, we also discussed that individuals can also have this same sort of control or the joint control or the significant influence. So in such a case, those individuals will also be considered to be the related party of the reporting entity. And in case we are looking at it from the perspective of individual, then the relatives of individual will also become the related party of the reporting entity. Yeah. Now, one was about entities having control. Entities having control. Second was entities having joint control or say significant influence. Third was wherein individuals are involved. Individuals having control, joint control or the significant influence. Okay. Number 4. So the fourth part is the one wherein the KMP of an enterprise get included. Key management personnel. KMP, and once the KMP has been covered or we establish that the particular individual is the KMP, then the relatives of KMP will also get covered. KMP and relatives of KMP. Okay. So now, what do you mean by KMP? So this aspect we need to understand in the definition of the KMP. Now, who will be the KMP for an entity? So if you can move a bit further, if you can go to page number, just 1 minute. If you can go to page number 1.67. Let's understand the meaning of KMP. Now KMP we can say is a person having authority and responsibility. Person having authority and responsibility for planning, directing and controlling. Activities of reporting entity. So now, who can be the person who will be playing this role? Who will have authority as well as the responsibility to plan, to direct, to control the activities of the entity? Such a role is generally played by the higher management in the organization. Board of directors will be one of the examples of the KMP. So board of directors, or you can say the directors. Many a times, CEO of the company or the CEO of the company could also be playing this role. And this role is something which is not specific to the designation. This will basically be dependent on the role which has been assigned to that individual. So that's why, for our purposes, we need to clearly understand, irrespective of the designation which has been assigned, whether that particular person is playing this role or not. Okay. Now, if you look at the CFO or the CS, CS means the company secretary of the company. If we go to the Companies Act, and I'm sure some of you would have read this, if you go to the Companies Act specifically covers these two as the KMP. Okay, Companies Act specifically covers these two as the KMP. But it is not necessary that these two are also meeting the criteria of being a KMP as per ASAT. Why? Because for an individual, for a person to become KMP, what is important? That he should have authority plus responsibility in respect of planning, directing, controlling the activities of the entity. So that's why whenever you look at the KMP, you will not simply go by the designation. You will have to look at the role and responsibility which has been assigned to that individual. Okay, clear on this? Yeah. The moment an individual becomes the KMP, his relatives will also be covered as the KMP. Okay, yeah. So this fourth part was all about KMPs getting covered as the related parties. Now moving further, next type of related party relationship. E. Enterprises over which any person described in C or D is able to exercise significant influence. Enterprises over which persons described in C or D. What is C? This one. What is the D? This one. Over which C or D. Okay. Any of them is able to exercise significant influence. Now, this would mean that if there is a director and okay, this includes this point number E includes entities which are owned by directors or the major shareholders of the reporting entity and entities that are a member of KMP in common with the reporting entity. Clear? Now, further on to this, AS 18 specifically excludes some of the parties from being a related party. Let's understand which are those parties, which are those relationships which AS 18 specifically says will not be a related party relationship. Okay. So these 5 are the types of related party relationships which get covered under AS 18. Now we are talking about those situations, those relationships which will not be considered as related party relationships as per AS 18. Yeah. So the first one, common director. Say for example, there is a company A Limited which has got 2 directors, D1, D2. There is another company B Limited which has got 2 directors, D2, D3. Now in this case, if you look at these 2 entities A and B, both of them one director who is common. Means there is an individual who is director in both the companies. There is one individual who is a director in both these companies. Now the question arises that just by being a director or just by having common director, can we say that A and B will become related to each other? And before we move on to this, please understand, these 2 are related to each other. Means D1 and A will be related parties. These 2 will be related to each other. They will be related parties. These 2 will be related parties. Correct? These 2 will also be related parties. Why? Because D1, D2, D3, who are they? They are KMPs of the companies. Now the situation that we need to consider is about A and B. Whether these 2, whether A and B will be considered as related parties or not. Okay? Yeah. So this is the situation that we need to understand. Now, there could be various aspects which we need to analyze in case of A and B. What are those? A and B could be fellow subsidiary. So if they are fellow subsidiary, they will be related party. Okay. Similarly, A may be subsidiary of B, B may be subsidiary of A. Okay. We are saying all those related party relationships which we discussed in points A to E do not exist in case of A and B. There is no such situation. And the only thing which we now see in case of A and B is what? Only and only one thing is that D2 is common in A as well as B. So just by having common director, can we make A and B as related parties? The answer is no. Okay, the answer is no. Just by having common director, if no other criteria of a related party relationship is met, we cannot say that A and B will become related to each other. Clear? Clear on this? So just by having common directors, we can't make two companies, two entities as related to each other. Yeah? So this was first situation. Number two. A single customer, supplier, franchisor, distributor, general agent, customer, supplier, agent, etc. Who carries out significant volume of business with the reporting entity, whose transactions are significant with the reporting entity. So let's suppose if there is a company A Limited. Yeah. 50% of its sales, or you can say 50 to 60% of its sales are with, say, party M. Now, just because party M happens to be a very significant customer of A Limited, can we say that party M and A Limited will become related to each other? The answer is no. Okay? No. So just by having significant volume of transactions, we cannot make two parties as related parties. Yes, of course, if the criteria which we discussed in A to E is met, then they will become related. Otherwise, not. Okay. Next, situation number C. Providers of finance. Trade union. Providers of finance, trade union, Public utilities, provider of finance, trade unions, public utilities, government departments, they will also not be the related party until and unless criteria in A to E is met. So now, what are we trying to understand? Let's suppose if there is a trade union. So just because it's a trade union, will it become related party of the reporting entity? No. Trade union has to meet one of the criteria of related party relationships in A to E. So just by being a trade union, we will not call it as related party. Just by being a public utility, just by being a provider of finance, we will not make that provider of finance as the related party of the reporting entity. Clear on this? So now, before I move further, if there is any question, any doubt that you may have, please let me know. Then we'll pick up an example also. Quickly, any questions, any doubt? Okay, Nikita is asking, sir, if A Limited is an associate company, so let me just put down the situation. So Nikita is asking, A Limited is an associate. So this is an associate. Okay. And B Limited is a subsidiary. So B Limited is a subsidiary. Yeah. Can it be a related party though they are having common director? No. So if you have two entities, this is an associate, let's suppose, of the same investor, and this is a subsidiary of the same investor. So here, because you are saying that they are having common director, so just because they are having common director, you will not make them as related party. Okay. Okay, Pooja is clear on this. Jay is also clear. Pratibha is asking for the second point. So what do you mean by second point? Because there are a lot of parts we have covered. If you can just clarify the point. Now, when we discussed about related party relationships, we covered certain situations wherein relatives of the individuals, relatives of the KMP were also covered. Remember? Now, who are those relatives? Or which all relatives will get covered as per this trend? So let's understand. You can also refer page number 1.68 if you want for this. So who will be the relatives? In relation to an individual, who will be the relative? Spouse, son, daughter, son, daughter, brother, sister, father, mother, brother, sister, father, mother. Yeah, they will be considered as related parties. Okay, clear on this? Now we can move to one example. So illustration number 1 on page 1.67. Identify the related parties in the following cases as per AS18. A Limited holds 51% of B Limited. So we have two companies, A Limited and B Limited. A Limited holds 51% of B Limited. B Limited holds 51% of O Limited. Yeah. Then we also have Z Limited, who holds remaining 49% of O Limited. Now we need to talk about the related parties. Yeah. Please remember that whenever we have to discuss the related parties or assess who is going to be the related party, we need to first of all look at the reporting entity. Yeah, we need to first of all look at the reporting entity. Means who will be the reporting entity for which related parties are being assessed. So now, because there are multiple entities, so we need to pick up one of these as the reporting entity. So let's suppose if we say the reporting entity is A Limited. Now who is the reporting entity? It is A Limited. Means for A we need to check who all are related to A. Yeah, for A we need to check who all are related to A. So let me just write it over here. The reporting entity for us is A Limited. Now for A, if we look at B, B is a subsidiary of A. So B therefore will be related to A. So for A, B will get covered. And if you look at O, O is subsidiary of B, or you can say indirect subsidiary of A. So O Limited will also be related to A. Correct? If we look at Z, Z is another investor who has invested in O, similar to what A has done or B has done. So just by having investment in O, can we say that Z will be related to A? The answer is no. So that's why for A, who all will be the related parties? B and O. Clear? Clear on this? Okay. Now, let's suppose we need to check the related parties of B. So who is the reporting entity? B Limited. For B, we need to check who all will be the related parties. So here again, if you look at B, A is the holding company of B. So A will be the related party. O is subsidiary of B, so O will also be the related party. But if you look at Z, Z is a company who has made investment in O similar to what B has done. So can Z become related to B? No. Yeah? Okay. Now, next one. You need to answer this and without looking at the solution, please. O limited. Let's suppose reporting entity is O limited. O limited is the reporting entity. Puja's spouse means husband, wife. Sanchita is asking who will be considered as relatives. Relatives, I think we have covered. Maybe your query was prior to this. Okay, now quickly on to this. I'll come back to your queries. Jay, I'll come back to your query. If you'll answer this for B, who all will be considered as related parties? For B. Okay, Maman is saying A, B, and Z. What about others? I can see the same response from Sanchita, Pooja, Khushi, Harsh, and Vrinda. Yes, that's very good. A, B, and Z. Why A and B? Because they are holding companies. B is immediate holding, A is ultimate holding. And Z. Z means a company who is having significant influence. Z is having significant influence. Why? Because it is more than 20%. Correct? Yeah. Now, next one is Z limited. For Z limited, who will be the related parties? Yes, tell me, who will be the related parties? Yeah, only for this one now. Yeah, the fourth situation. Who will be the related parties? Quickly. Okay, great. Pooja, Khushi, Sanchita, Meman, they are saying it will be only O limited now. Saurabh is given the same answer. It will be only O limited. Why? Because O is associate of Z. So definitely this will be related. But if you look at B, if you look at A, they have no related party relationship with Z limited. Okay, clear? Now let me go to your queries. Sushil, there's no problem, but you need to just relook at the part which you might have missed. Okay, Jay was asking if Reliance purchased 25% of total shares of Wipro. Yeah, so he is covering a situation. Let's suppose if Reliance purchases 25% shares of Wipro, then Reliance is called associate company or Wipro is called associate company? Wipro will be considered as associate. Similar to this situation. Let's suppose this is Wipro, wherein if Reliance buys 25%. So who is having significant influence? It's Reliance. Over whom? Wipro. Wipro is not having significant influence. Wipro is getting significantly influenced by Reliance. So that's why Reliance will be considered as the investor and Wipro will be considered as the associate if this happens. Okay. Yeah, clear? then I think some of the responses I missed, they were also for Z limited. Yeah. Pratibha, Rama, Nitya, very good. Yeah. Sharan has also shared his response. Great. Vandana has also shared. Mahima, Murgu, they have also shared. Okay, great. So now, moving further onto this gender. We will now discuss the disclosure requirements. So far, all things that we have covered were all in relation to the related party relationship. Means we discussed which all relationships will get covered over. Now, once the related party relationship is established, what is the next step? The next step is to look at the disclosure requirements in the financial statements. Because if two parties are related parties, then certain disclosures in respect of these two parties are required to be given. Let's understand what are those disclosures. Wherever control exists, control means if an entity has got control over another entity. Let's suppose if this relationship is established, if an entity has got control over another entity, if this relationship is established, means relationship of control is established, then what are the disclosure requirements? Name of the related party. Name of the related party, nature of the relationship. So these two disclosures are required irrespective of whether there is any transaction, irrespective of the fact whether there is any transaction or not. Now please understand, the moment we make two parties as related parties. So let's suppose for A Limited we are checking who all are related parties. Say we are establishing B is related, C is related, D is also related. The moment there is a related party, any transaction between the related party and the reporting entity is required to be disclosed. So what would it mean? Say A has sold goods to B. A has sold goods to B worth rupees 20 lakhs. So in that case, this transaction will have to be disclosed. Okay. Say A has purchased goods. Purchased goods from C. This transaction will also be required to be disclosed. Yeah. Say A has taken premises on lease from D and A is paying lease rent. A is paying rent to D. So this transaction will also be disclosed. So any transaction which is carried out during the year with the related parties will be disclosed. Any transaction. Yeah. So the third part will be any transaction. Any transaction with that related party. Let's suppose at the year end, if there is some balance which is outstanding in respect of this related party. For example, A has sold goods worth rupees 20 lakhs to B and 5 lakhs is outstanding. A has purchased goods from C and entire amount is outstanding to be paid. Rupees 10 lakhs is outstanding. This rent has been accrued, but this has not been paid. So rupees 5 lakhs is outstanding. In respect of any related party transaction which has been carried out during the year, or in respect of related party transactions which might have taken place in the previous years, if there is any balance with the related party, whether it is receivable or payable, whatever it is, so those balances are also required to be disclosed. So what is the fourth disclosure requirement? Related parties balances. Okay, balances are also required to be disclosed. So what are the disclosure requirements? Two. We have two disclosure requirements. Which disclosure requirements are there? Point number 3 and 4. 3 and 4. Okay, these two disclosures will always be given, but there are two more disclosures. What are those two disclosures? Name of the related party and nature of the related party relationship. So these two additional disclosures are also required. So all in all, in respect of every related party relationship, related party transaction, related party balance, 4 disclosures are mandatory. What are those 4 disclosures? 1, 2, 3, 4. Every time financial statements will have these 4 disclosures. Every time. Okay. But one thing which you would have understood is that these disclosures are possible only and only when either there is transaction during the year or some balance is outstanding. Correct? Now to this aspect, one very important point which we need to consider is about point number 1 and 2. Point number 1 and 2. Now what does it say? Standard says wherever control exists, I'm not talking about any other related party relationship. I'm talking about only the related party relationship wherein the control is established. For example, holding and subsidiary. For example, A is holding of, say, E Limited. A is holding of E Limited. Okay. There is no transaction during the year between A and E. During the year, there is no transaction between A and E. No balance is outstanding in respect of E. Why? Because these two parties have never transacted with each other. Never. Still, these two disclosures are required for this type of relationship. What are those two disclosures? Name of the related party, nature of the relationship. So irrespective of whether there is any transaction or not, these two disclosures will always be given wherever control exists. In case control doesn't exist and the party is a related party, then in such case disclosures will be given only when there is a transaction or there is a balance. Fine? Clear on this? Clear on this aspect? We can now move on to another illustration. This is page number 1.69. Page number 1.69. So let's move on to this illustration now. Narmada Limited sold goods for rupees 90 lakhs to Ganga Limited during the financial year ended 31st March X1. So we have N Limited which sold goods to G Limited. Okay, this is the transaction. Sold goods worth of 90 lakhs. Managing Director of Narmada Limited owns 100% of Ganga Limited. So Managing Director of N Limited holds 100% shares of Ganga Limited. The sales were made to Ganga Limited at normal selling prices, followed by Narmada Limited. But does it matter to us? No. Whether the sale is at normal selling price or not, we are not concerned with this aspect. Chief Accountant of N Limited contends that these sales do not require a different treatment from any other sales made by N Limited, and hence no disclosure is necessary as per the accounting standard. What does it mean? That N Limited is the reporting entity. Means this is the reporting entity. So we are looking at the disclosure requirements of N Limited, not G Limited. For which company financial statements are being prepared? N Limited. So for N, we need to check whether G is related party or not, and if yes, what all disclosures are required. The question is the contention of Chief Accountant correct or not? Quickly, over to you. Without reading the solution, if you can just answer this quickly. Navneet, I think you need to get in touch with the concerned team. Vanna, I'll come to your queries after this. Let's discuss this. Yes, quickly, if you just tell me what is the answer. Okay, so Pratibha is saying chief accountant is not correct. Can you also give me the reason? Nikita is saying N and G are related. So the sales made to G need to be disclosed. Ash is saying accountant is wrong because transactions need to be disclosed. Pooja is saying accountant is incorrect. This is a related party transaction. Means transaction with the related party. So the disclosure is required. Vandana is saying accountant is wrong. Kushi is saying accountant is wrong. Okay, any more responses? Sandeep is also saying accountant is incorrect. Vrinda is saying disclosure of point number 3 and 4 required due to transaction. Okay, great. 3 and 4 means 3 and 4 which we discussed. Sanchita is saying disclosure is required. Pratibha is saying we have to disclose G as the related party. Saurav is saying MD is a party who is MD is a related party. So relatives of related party is also related. So he's just trying to establish as to how the related party relationship is established. Sharon is saying no disclosure is necessary. Okay. Mahima is saying no. The chief accountant is incorrect. Ria is saying disclosure is required because G is the related party. Dorji is saying CFO is wrong. Okay, Sakina is saying chief accountant is wrong. Maman is also saying he is wrong. Sonu, Rakesh, I think they have the similar answers. Adit is also saying chief accountant is wrong. Okay, Rakesh is saying chief accountant is right. All right, no problem. So let's understand. Now in this case, if you look at the KMP, who is the KMP of N? It's MD. So wherever the MD means KMP of the entity is able to exercise significant influence. Remember that situation, that related party relationship? Because of this, N and G will become related to each other. Correct? The moment they become a related party, any transaction between them requires disclosure. And does it matter to us that the transaction is taking place at normal price or not? No. We are not concerned with this aspect of the pricing because this standard doesn't talk about the price. This standard simply says that whatever is the transaction, you need to simply disclose. Okay? Yeah. So in this case, disclosure will be required. Disclosure of this transaction. So now, in the financial statements of N Limited, what all disclosures will be given? First, name of the related party. So what will N give? Let's suppose if you look at the financial statements of N. So first, it will say G Limited. Name of the related party, G Limited. Nature of the relationship. So in the bracket, it will explain the nature. So nature, in case of nature, it will say KMP having significant influence over G Limited. Correct? Then, number 2 will be the related party transaction. Related party transaction. The related party transaction will be the sales. Sales rupees 90 lakhs. We are not aware of the balance. So let's assume nothing is collected. So if nothing is collected, Then the next disclosure will be related party balance. That will be again G Limited rupees 90. To the next standard, I can see a couple of queries in between which I missed. Vandana was asking, sir, अगर holding subsidiary की एक और layer हो, then what would be the situation? It doesn't matter. Huh? It doesn't matter. Though legally it's not possible, but if there is one more layer, and if the same relationship is established, that will also get covered. And Sanchita was asking, can you repeat the last part of wherever control exists and where only transactions take place? So the last part was wherever control exists, in such a case, irrespective of the fact that whether the transaction has taken place or not, means no transaction has taken place during the day. Irrespective of that, this disclosure, name of the related party and the nature of the relationship will be given. Why? Because this is not possible, this is not possible, but this will have to be given. But this is something which is required only when control is established. If it is through significant influence, then this disclosure will be given only when there is related party transaction or balance. Clear? Pooja is clear on the standard. Very good. What about others? Any questions, any doubts that you may have? Vandana is clear on this. Harsh, Sanchita, they are also clear. Sonu is asking where it is stated in the question there is control exists. In the last question that we discussed, in the last question, control did not exist. Okay, we didn't discuss that situation of control. Vrinda is asking, in case MD of the company is holding only 15%, then what all disclosures are required? In case the MD is holding only 15%, then first of all, we'll have to evaluate whether significant influence exists or not. In case it's not there, then it may not be a related party. Okay. Jay is also clear on this. Great. What about others? So let's move to the next standard, AS17. This is about segment reporting. or you can say the disclosures in respect of segment. Now, once again, in this standard, we will not be discussing any recognition or measurement requirement. Once again, in this standard, only disclosures are discussed. This standard is again talking about only and only disclosures, no other thing. Yeah. So means we are going to look at some more disclosure requirements with the help of this standard and nothing else. Yeah. Okay. So now this standard deals with the disclosures in respect of segment of an entity. So let's try to understand about the segment of an entity in a very simple manner. Let's suppose there is a company A Limited. This company manufactures, say, furniture. This company is dealing into furniture. Whether it is about sale which takes place after manufacturing or which is only in the nature of trading, it's limited to only the furniture. So the line of business which we can say for this company is only one. So it's into one line of business. Okay. So it's into one line of business only. Yeah. Let's look at another company, B Limited. Now B Limited has got plant. Plant 1, wherein it is manufacturing furniture. In plant 1, it is manufacturing furniture which is also sold outside. Similar to what A Limited is doing. Then B Limited has got another plant. Plant 2, wherein it is manufacturing, say, bottles. So it is manufacturing and selling bottles. Correct? Third, it is also involved in real estate transactions, or you can say business. Now, if you look at this company, B Limited, can we say that this company is into one line of business? Tell me, can we say that this company is into one line of business? The answer will be no. It will not be possible for us to say that B is into one line of business. B is into three lines of businesses. It's dealing with furniture, it's dealing with bottles, it's also into real estate. Yeah. So that's why whenever we will look at B, or whenever B will have to look at his performance, its performance, what should B do as compared to A? Let's understand. A will prepare its financial statements. which will have balance sheet, which will have P&L, which will have cash flows. So if A will have to evaluate its performance, A may look at the performance collectively for both these types of activities. Yeah, because definitely the nature is slightly different. Even though it's into furniture, the nature is different, but still A may collectively look at the performance by looking at its financial statements. Or you can say the users of the financial statements of A will be able to appreciate the business or the performance of the business by looking at the financial statements of A Limited, wherein both these are given in a collective manner. The numbers are given in a collective manner, correct? Because balance sheet, P&L, cash flows, they will not be prepared separately for these two activities. There will be only one, correct? But let's talk about financial statements of B Limited. Now, if you were the user of financial statements of B Limited and you are given the financial statements of B Limited, wherein information of the company is given in this collective manner, means balance sheet is given, which comprises of all the activities. Of course, P&L is given, which comprises of the total sales, total profit, everything is given in totality. Tell me, will you get clarity about various business lines of this company? Will you be able to appreciate the performance of these business lines just by looking at the financial statements the way we prepare right now? Tell me quickly, what are your thoughts? Will you be able to understand the performance of the business? Quickly, yeah? Tanu is saying no. So what do you think should be done in such a case? Over to you. Do you think you will be able to appreciate the performance of the business lines? Yes or no? And what should be done in case you are saying no? Pooja is saying no. Vrinda is saying no. For each business line, separate books should be prepared. There's no doubt separate books are being prepared. But in the financial statements, the numbers are given in a collective manner. Sanchita is saying, no, we cannot judge them separately. Yeah? So I think one aspect over all of us are clear is that by looking at the financial statements, the way we prepare them, we will not be able to understand the business performance of these business lines. Yeah? So that's why if I am the user of the financial statement, what would I want? I would want that in the financial statements, separate numbers for these three business lines should also be given. Now, these numbers cannot be given in the balance sheet because the way balance sheet is prepared will not change. The way P&L is prepared will not change. The way cash flows are prepared will not change. But in the financial statements, we can always include a disclosure which contains financial information of only this, and only this. By doing this, what will happen? User will be able to understand what is the performance of only this business line. Maybe the company is showing, say for example, sales of 1,000 crore. Maybe it's a large company having sales of 1,000 crore, wherein the profitability is 100 crore. So if anyone looks at the company, you will find this to be a very, very strong company. But in this company, it may happen that this particular business line is making losses. Let's suppose this business line is showing losses. And despite having losses on an overall basis, what do we see? Profits of 100 crore. Yeah. So that's why for the management, what is important to look at the business performance separately. And for the users also, it's important because management will be able to understand why they will be having separate books of accounts. They will be analyzing it internally. But what about users? They are not having access to books of accounts on a daily basis. They will have access only to the financial statements. So that's why in the financial statements, the disclosure in respect of these three business lines should be given. Correct? Yeah. Okay. Now, this is one of the aspects which we have discussed, wherein we talked about the nature of the activity of an entity. Correct? We discussed about nature of activity of an entity, and through the nature of the activity of an entity, we discussed that this entity is having only one line of business and this entity is having 3 lines of business. Correct? Okay. Let me just bring in some more facts over here. This was about nature of activities. Let's suppose, I'm just continuing further on this. Let's suppose this company is selling furniture in India. This company is selling furniture in India and say UK. Yeah. So markets, or you can say geographical markets, for this company are not one. It's dealing into 2 territories, India and outside India. Correct? So this furniture is sold in these 2 markets. Okay. For this company, the market is only one, India. For this company, the market is only one, India. Yeah. Let's suppose in India, this company is operating only in one city, Nagpur. All of its activities, where it is about manufacturing and sale, all of these take place only in this city, not outside this. You may be thinking, but sir, how is this significant volume possible by operating only in one city? Only for the purposes of our discussion. Now here again, if you were the management of the company, forget about 3 lines of business. If you want to review the business performance area-wise, market-wise, for this company, it's relatively simpler. Why? Because this company is dealing into one market only. This is dealing into one geography only. But if you look at this company is dealing in 2 geographies. India and UK. Maybe the sales which it makes in India are giving good margins. Say, here the margins are good, 15%. But the sales which it is making in UK are not giving good margins. It's only 2%. Or it may be other way around. Yeah. So here again, will the management want to review its performance on the basis of the geographies? Management would definitely be doing that. Management would definitely be reviewing its performance on the basis of the geographies. Yes or no? Management would be doing that for sure. But here again, if one looks at the financial statements of this company, will the user be able to understand the performance of these two geographies separately? No. So that's why here again, what should we do? For the purposes of the users of the financial statements, we should bring out this disclosure. We should bring out the numbers for these two geographies separately. Correct? Only then the user will be able to understand the performance of this business in these two geographies. Correct? Yeah. So we have understood one point, that it's not only the nature of activities which could be one of the criteria for reporting of numbers or looking at the business performance. It could also be based on the geographies in which the company is operating. Yes or no? Clear? Yeah? Okay. Now, all of these aspects that we have discussed were in general. So we're just trying to understand if there were certain companies which are having different lines of business, which are operating in different geographies, how should they really be looking at their performances? Yeah? Now for us, we need to understand what is the requirement of the standard. The requirement of AS17 is similar to our need, which we felt is important. So we felt the disclosure of these business lines somewhere in the financial statements is important. We felt there is a need to give disclosure of these two or the performances of the business in these two geographies separately. Correct? This is something which we understood is important to be disclosed. So this is exactly what the standard also requires. Standard says that first of all, we need to identify the segment in a company. What can become a segment in a company? So, basis of preparation of a segment could either be on the basis of nature of activities, or you can say nature of business, or on the basis of the products or the services the company is dealing into, or it could be on the basis of geographies in which it is operating. Standard says there are two criteria through which we can look at the segments. It can be either through this or it can be through this. If we go by the nature of activity, and if you look at this company, for this company there will be three segments. One is manufacturing and sales of furniture. Second is manufacturing and sale of bottles. Third is real estate business. For this company, if you look at the nature of business, we may not find more than one line of business, but still, on the basis of geographies in which the company is operating, we may say there are two segments. Which segments? One is the Indian market, second is the UK market. Clear? Clear on this? Yeah? Okay. So now, this is about the segment. So the segment which we prepare on the basis of nature of activities, products, services, etc. are called as business segments. These segments are called as business segments. And segments which we create on the basis of geographies are called as geographical segments. Okay, clear? Clear on the meaning of the segments? Yeah? Now, the way we will approach in terms of assessment of the segment has to be on the basis of the understanding of the management, the way they are running the business, the way they are approaching the business performance, the way they are internally analyzing the business performance. So what does it mean? Let's suppose if this company, let's suppose, is operating in 3 geographies. Say this company is looking at 3 geographies. What are geographies? First, Northern India. Second, Western India. So this is how its markets are defined. And third is outside India. Let's suppose this company has got 3 markets. Furniture is sold in these 3 markets. Bottles are sold in these 3 markets. Real estate business is in these 2 markets. Now the question arises that what should become the basis of identifying a segment? Should it be on the basis of nature of business? Means should it be driven by the businesses the company is into, or should it be driven by geographies? Means some basis will have to pick up. If there are 2 criteria, which basis do we pick up and identify the segment? What will become the basis? In this case, standard says that first of all we need to understand the management approach. Yeah, the way management is considering its segments, and we need to look at the way risks and rewards, risks and returns are identified by the management in respect of the activities which is involved into. Yeah, whichever is more dominant out of these 2 will become the basis for identification of a segment. Okay, clear? Clear on this? Now, next aspect is about the segment which is required to be reported. So I just touch upon this point. I will not get into too much details of this point because I understand you will be looking for a break. So I think I'll take another 2 minutes and then we'll take a break. So don't worry. Before this, Sanchita has a query. Sanchita is saying, if we prepare the segments as per their nature, can we prepare it as per geographical also for the same financial year? The answer is yes. And this is what the standard also requires you to do. And it's not about can we prepare, you will have to give the disclosures of both the types of segments. We'll get on to that part slightly later. Okay, so this is not something which is a choice. This has to be done. Okay, I'll come to that part bit later. Now, the next aspect is about segments which are required to be reported. So, one thing which we have discussed so far is about the identification of segments. That in a company, various segments are possible. It could be on the basis of nature of business. It could be on the basis of geographies. Yeah, either way it's possible. So let's suppose this company has got 6 segments. Or let's say 7 segments. Yeah. For a company, it may be more than that. Now the question arises that in the financial statements, do we need to give the disclosure for each and every segment? Now this is something which is very, very important. Because an entity may have multiple segments, but which all segments are required to be disclosed. Means the disclosure requirements for which segments has to be given in the financial statements is something which is required to be assessed first of all. And the segments for which the disclosures will be given are called as reportable segments. Reportable segments. So by reportable segments, we mean to say if an entity has got, let's suppose, 7 segments, for which only 3 segments are the one for which disclosures are required. Means for the other 4 segments, disclosures are not required in the financial statements. Then those 3 segments will become reportable segments. So out of 7, if we decide that 3 are reportable or the disclosures for 3 will be given, then those 3 segments will be called as reportable segments. All of these are segments, but all these segments may not be reported. And the other one, yeah. So the segments for which disclosures will be given separately means for each of these 3 segments, let's say for example S1, S3, S4, these 3 have been chosen as reportable segments. Means for S1, disclosures will be given separately. S3, disclosures will be given separately. S4, disclosures will be given separately. So these 3 segments will therefore be called as reportable segments, and the others called as others. And these are not the reportable segment. Now the question arises, and I'm sure you will be, now waiting for this answer. That's how do we identify a reportable segment? So far we have understood how to identify a segment, which is clear to all of us. But out of those segments, which all segments will become reportable segment? What is the criteria? How do we identify it? Okay, so this is the next aspect that we'll cover. Yeah, so we'll now take a break. After the break, we will get on to the reportable segments. Clear? Any questions, any doubts that you may have in the meantime, please let me know quickly. Or you can just send across your queries. Yeah. So after the break, we will pick up the reportable segments. Fine. So you can just send your queries and we'll pick your queries after the break. Continue with our discussion. So now we need to understand how will a segment become a reportable segment. For a segment to become a reportable segment, for which disclosures will be given, in the financial statements. Certain criteria is specified. Standard gives you a criteria on the basis of which we need to identify. And this criteria is on the basis of certain quantitative thresholds. This criteria is on the basis of certain quantitative thresholds. Identification of reportable segments. So let's understand what are those criteria. There are three criteria which are given. If any of the criteria is met, I am repeating, if any of the criteria is met, then such a segment will become reportable segment. So what's the first criteria? A. The sales to external customers or internal sales. External or internal sales. Of a segment. External or internal sales of a segment. Are 10% or more of the total sales. Are more than or equivalent to 10% of total sales, covering both internal and external. So let us understand, what do you mean by this, internal or external? Say in a company, there are 5 segments. Segments are selling to each other. Segment 1 is selling to segment 2, segment 2 is selling to segment 3. Yeah, so these are called as internal sales, means within the company. And the sales which are made outside the company are external sales. So we need to look at the sales of the segment. Whether it is external or internal will capture both. So if the sales of a segment, of that particular segment, are greater than or equivalent to 10% of the total sales, means not the sales of the company, but in this sale will also include the internal sales, then such a segment will become reportable segment. So this is criteria number 1. B. Criteria number B. Segment assets are greater than or equal to 10% of total assets. Means if the segment has got some assets whose value is say 15% of total assets of the company, then such a segment will become reportable segment. So we can say either criteria number A is met. If A is not met, we'll check B. If B is not met, we'll check A. Yeah, so either Or we have got one more criteria. What is the third criteria? This is a bit tricky criteria, so that's why I need your attention now. Okay, I'm telling you, I need your attention now. Yeah? Just 1 minute, because we'll also have to pick up one example to understand this criteria. Okay. Third criteria. Segment result. What do you mean by segment result? Means the profit or loss of segment. We'll prepare the profit or loss of segment and we'll check what is the segment result. Yeah? Segment result is greater than or equal to 10% of combined results of combined results of all the segments. All segments in profit or 10% of combined results of all segments in losses, whichever is greater in absolute amount. Whichever is greater in absolute amount. So if you want the page reference, you can refer page number 1.55. Okay, but this criteria number C is bit tricky. Let's understand what do you mean. Say for example, segment result is rupees 15. Means profit of the segment is rupees 15. And let's suppose we have 3 more segments which are also into profit. We have 3 more segments which are also into profit. So profits of those 3 segments is 45 plus this segment is 15. So total profit becomes 60. So total profit of segments which are showing profit is what? 60. Why? Because we are saying one segment is this which is showing a profit of 15. There are 3 more which are showing a profit of 45. So if I club the segments showing profit, the profit becomes 60. Okay. Now over and above these 4 segments, so far we have discussed 4. 1 plus 3, 4 segments we have discussed. There are 2 more segments. Over and above there are 2 more segments. Okay. These 2 segments are showing loss of rupees 100. So their combined loss is what? 100. So I'm putting this as negative number. Okay. Now, in this case, standard says you will pick up the profit or loss in absolute amount. So this amount, if let's suppose is loss, you will pick up this amount in absolute figure. So this becomes 15. So let's suppose if this was loss, this will become 15. Currently it's profit, so anyways it's 15. You will club the segments which have got profits. We got 60. You will club the segments which have got losses, so it's 100. Out of these two, we will make these figures as absolute. So we'll make these figures as absolute. So this is 60 and this will become 100. So whichever is greater in the absolute amount. So out of these two, which one is greater now? 100. Out of these two, which one is greater now? 100. So we will pick up 10% of 100. Why? Because we need to pick up 10% of either 60 or 100, whichever is higher in absolute figure. So now 10% of 100 will pick up. What does it become? 10. It becomes 10. So we get 10. Over here, what do we have? 15. So 15 is greater than 10. So that's why this segment will become reported. I can understand this point is a bit tricky for you. So that's why I'll repeat. I'll repeat this point. Let's suppose company has got 6 segments. Company has got 6 segments. And let me just put down the numbers. S1 showing profit. S2, S3, S4. They are showing profit. Okay, so this is showing, let's say 10, this is showing 20. Okay, so this is 30. Let's suppose this is showing 15. Then there are 2 more, S5 showing a loss of 60. S6 showing a loss of 40. Yeah. Now, we need to check whether S1 will become reportable or not. So what do we do? Absolute figure of S1 will be picked up over here. What do we get? 15. Yeah. So this has been picked up over here. It is 15. Now, what do we need? We need to check whether this 15 is greater than or equal to 10% of these profits clubbed together, which is 60, or these losses clubbed together in absolute amount. So what do we find? We find 100 is the higher figure. So 10% of 100 becomes 10. Okay. As a result of this, what do we find? This 15 is greater than this. So that's why S1 becomes a reportable segment. Clear? Clear on this? Clear on this? Now, as we discussed, let me just go back to this point. Shraddha is asking, sir, what do you mean by absolute? Absolute means if the figure is negative, you will make it positive. That is what we mean by absolute. If the figure is negative, you will make it positive. Yeah? Clear? Charu is asking, sir, percentage of external sales and internal sales is to be determined separately. No. You will club these two. You will club these two. You will not determine it separately. Yeah? Pooja, I think third point is now clear. Anyways, we'll pick up an illustration and you will get more clarity to that. Okay, now, with which we started, we are saying if we have to identify a reportable segment, we need to look at the criteria. If any of these criterias means if A is met, then the segment will become reported. If B is met, segment will become reportable. If let's suppose A is met, but B and C are not met, even then segment will become reportable. Means any of the criteria has to be checked. Not all the criteria have to be checked. Clear? Clear? Charu, please wait. Anyways, we are going to discuss an illustration. You will get it. Okay? Please have patience. Please wait for some time. So this is the criteria for identifying a segment as reportable segment. Okay? And what are the criteria? A or B or C? Please remember one point, that we are not yet done. You can say these criteria of A or B or C was the step 1. We also have step 2. Yeah. Once we discuss step 2, then we'll go to the illustration. Okay. Now what's the next step? In step 1, what did we identify? Reportable segment. Step 1 will give us the reportable segments. So out of 6 segments, let's suppose this step 1 has given 2 segments as reportable. It says S1 and S4 are reportable. Okay. After applying step 1, what did we find? After applying step 1, what did we find? 2 segments became reportable. S1 and S4. Fine. Now, in step 2, we will have to perform a test. It's a test. Let's see what's the test. We will have to check the revenue of S1 and S4. Let's suppose revenue of S1 was, say, 55. And revenue of S4 was 10. Or let's suppose this was 45 and this was, say, 25. Okay. Yeah. Total revenue is what? 100. Total revenue is 100, out of which revenue of S1 is 45, S4 is 25. Yeah. And we found that these two have become reportable segments. Yeah. So there's no doubt that S1 and S4 will remain reportable segments. They will remain reportable segments. Why? Because they have passed stage 1. They have passed step 1. But after passing this step 1, another test will have to be performed. Let's see what's the test. Next step, step 2 says, we need to check total revenue of reportable segments. Please remember reportable segments. Step 2 says total revenue of reportable segments. Yeah. Should be at least equivalent to 75% of total revenue. Total revenue of reportable segment should be at least equal to 75% of total revenue. Now let's perform this test on our segments. Now our segments are S1 and S4, which have a total revenue of 45 plus 5, 50, 70. So it is 70. And total revenue is what? 100. So what do we need? 75. Is this at least equal to this number? No. So now standard says total revenue of reportable segment should be at least equal to 75% of total revenue. If this criteria is not met, then what do we need to do? Out of the remaining segments, S1, S2, S3, S4, S5, S6. There were 6 segments, out of which we have already captured S1, we have already captured S4 as reportable. 4 have not been considered as reportable. Why? Because in step 1, all the criteria were failed in respect of these 4 segments. Now when we move to step 2, irrespective of the fact that all these 4 segments, S2, S3, S5, S6, have not met any of these criteria, A or B or C, we will have to pick up one or more segments in such a manner that this criteria is met. So let's suppose revenue of S5 is 5. Let's suppose revenue of S5 is 5. Yeah. Now, irrespective of the fact, I am repeating, irrespective of the fact that S5 does not meet any of these criteria, if we include S5 over here, this criteria will be met. If we include S5 over here, this criteria will be met. Yes or no? Yeah? Tell me quickly. If we include this over here, so this criteria as per step 2 will be met or not? Quickly, I am waiting for a response. Over to you. If we include S5 over here, then criteria as per step 2 will be met or not? Quickly, tell me. Pooja is saying yes. What about others? Quickly. Great. Charu, Sandeep, Tanu, they are saying yes. Very good. So now what do we need to do? If by chance, as per step 2, we get into any such situation, we will have to include one or more segments over here. We will have to include one or more segments over here in such a manner that this criteria gets done. Now the question may arise, what will become the basis of choosing segments from these one? This is up to the discretion of the management. They need to apply the judgment. Okay, there's no fixed criteria over here. There's no quantitative criteria over here. Management will have to decide out of the remaining segments which one they find as the most appropriate one, which should become reported. Because the moment you include it over here, that will also become reported. Now, as a result of this, what has happened? S1, S4, and S5, 3 have become reportable. Standard says if you check this and you find that your reportable segments are less than 75%, then make more segments as reportable such that total revenue of reportable segments should be at least equivalent to 75% of total revenue. Clear? Yeah? Clear on this? Clear on this? Great. So now what we will do is we'll pick up one example based on this, through which hopefully you should get more clarity around this principle. So you can go to illustration number 1 on page 1.59. Illustration 1. Okay, please read the question carefully. You will have to answer this. Yeah? It's based on the criteria that we have discussed. You have to apply those criteria for this illustration and accordingly let me know the answer. Okay. Chief Accountant of Sports Limited gives the following data regarding its 6 segments. M, N, O, P, Q, R. There are 6 segments for which assets numbers are given, results are given. Results means profits or losses. Positive figure means profit, negative figure means loss. Revenues of every segment are given. Yeah? Numbers are clear to all of you? Chief Accountant is of the opinion that segments M and N should be reported. Means out of these segments, M and N are reportable segments. That's the view of the chief accountant of the company. You need to confirm whether their assessment is correct or incorrect. Over to you quickly. You need to tell me out of these 6 segments, which segments are reported. Tell me. Waiting for a response now. Out of these segments, which segments are reportable? And you can also note down one point. Illustration 5 and illustration 2. Your homework, huh? Illustration 2 and 5 for your homework. Very, very simple illustrations, but please don't get into these 2 illustrations right now. Currently, you need to focus on Illustration number 1. Tell me, out of these segments, which segments are considered as reportable segments? I started receiving some answers. Jyot is saying M, only M. Harsh is saying MNOPQ means all except R. Very good. So Charu, I think, is also saying all except R. What about others? Please don't look at the solution. Modugu is saying chief accountant is wrong. But what is your solution? That you have not shared. Huh? Okay, Khushi is saying all are reportable. Great. Tanu is saying M and N. So that means whatever chief accountant is saying is correct. Sandeep is saying all are reportable. Modugu is saying M, N, O. These three are reportable. Okay, I'll wait for some more answers. Then we'll get on to the solution. Samyak is saying all are reportable except R. Meman is saying MOP are reportable. 3 are reportable. Okay. Then Tanu, I think, is still analyzing it on the basis of different criteria. Pooja is saying MNOPQ are reportable. R is not reportable. So I think most of you are saying all except R. Maima is saying M and R are reportable. Jay is saying all are reportable. Nikita is saying all are reportable. Vrinda is saying M and O are reportable, and same is the response of Dorji. Okay. Okay, Pooja has also given the explanation as to why R is not a reportable segment. That's good. So I think we can go to the solution now. Okay, let's understand now. If we look at the criteria of assets, revenues, if you look at the criteria of assets or revenues, what do we find? If we look at the assets, assets of M are 40, total is 200. So it's greater than 10%. So M becomes reportable. N also becomes reportable. M becomes reportable. N also becomes reportable. Correct? Oh, 30 divided by 200. This is also reportable. P and Q, who have got 10% of the total assets each. Yeah, each. So P and Q, they also become reportable. So I think just by looking at one of the criteria, what did we find? All except R become reportable. But this is not the only criteria that we have. Please remember, this is not the only criteria that we have. We have got one more criteria, that of results. In fact, we have got two more criteria, results and revenue. We will get on to results criteria first. Do we need to check this criteria for M, N, O, P, Q? No. Why? Because we already know that these segments are meeting the criteria as per assets. So these are already selected. Yeah, they have passed the test. They have already become reportable. Now we only need to check segment R, because that's the only one which is left out. So what is the profit or loss of segment R? 30. Okay. Now this should be greater than or equal to 10% of total profits. So if you look at the profits, what do we have? 50 plus 10 plus 10 plus 30. 50 plus 10 plus 10 plus 30. Correct? So it's 100. This is the total of profits. Or you can say total of only profits. And we need to take the total of only losses. So 190 plus 10, 200. Total of only losses. Absolute figure of these two is required to be taken. So we have not taken 200 as the negative number. I have taken 200 as the positive number. Out of these two, whichever is higher has to be picked up. Whichever is higher. So out of these two, which one is higher? 200. So what do we do? 10% of 200. What would it become? 20. So 30 definitely is greater than 20. So do we meet this criteria? The answer is yes. So segment R is meeting the criteria of results. So that's why R on the basis of this criteria will also become reportable. Clear? So now what do we have? What do we find? We find that all the segments become reportable. These 5 segments became reportable on the basis of assets criteria, and R, which was left out, became reportable on the basis of results criteria. Do we need to get to the third criteria? No. And please remember, this was step 1. Do we need to apply step 2? Not at all. Because nowhere in the question they are asking us to perform the test that whether the total of all the reportable segments will become 75% or not. And anyways, if we'll pick up all the segments, then their revenue will be 100% of the total revenue. Anyways, step 2 will be met in this situation. Yes or no? Anyways, that step 2 will be clear in this situation. So that's why, what do we say? that all the segments are reportable segments. So the contention of chief accountant is absolutely wrong. What do we find? All segments are reportable. You may be thinking, sir, in the exam, which criteria do we start with? You can pick up any criteria. There is no preference. Let's suppose if you would have started with revenue and you will have selected certain segments as reportable on the basis of revenue, it is absolutely fine. Yeah. There's no preference which is given in the standard. Any of the criteria has to be met. So till the time your assessment will be correct, it will not matter. So I think most of you gave me this answer. M, N, O, P, Q except R, which clearly indicated that you had a challenge in checking this criteria. And as I told you, this criteria is a bit tricky, but I'm hoping that now you are clear on this. How do we check the identification of reportable segment on the basis of results criteria? Okay, clear? Ria, clear on this now? Tanu is saying now I'm clear. Very good. Ria is saying this was a bit tricky. I can understand, and that's why this will help you. And I would suggest that you should practice this on your own. Okay? This example is there in front of you. You can solve it on your own, and don't apply this criteria only on R. Apply this on M, apply this on N, apply this on O, apply on all of them, and then you test whether these segments will become reportable as per this criteria or not, just for practice. You will start getting clarity. Okay? Because you will have to apply this test, this criteria 6 times. Yeah? Clear? Okay, so any questions, any doubts that you may have on this, please let me know. Because we are not yet done with this standard. Some part of this standard is still left. But I think we'll be able to wrap up this standard only in the next session. Not today. Yeah. Not much, but bit of this standard is also left. So if you've got any questions, any doubts around this standard, please let me know. And please remember one more homework for your next session. And that is to revise this part that we have covered today. Revision of AS 17 covered today. This will be very, very important. Because I think the next session that we are going to have is on Sunday. Yeah. So there's a bit of time in between. So you may lose out some of the points. You may forget some of the points. So it's very, very important that you revise this before we meet next. Only then you will be able to appreciate the remaining part of AS17. Yeah. Ria seems to be clear on this. Charu is asking, sir, when do we need to check the second step? When asked by the question? Yes, of course. When asked by the question. Or let's suppose when the disclosures will be required to be given by. Something like this will cover when we'll pick up some more illustrations. Okay. Otherwise, you should not get on to step 2 until unless asked by the question. Okay. Yeah. Or in any ways, if you look at this situation, in this situation, step 2 will automatically be met. Correct? Ray is asking, sir, that means it's up to me to take any segment as per segment results. Yes, it's up to you. If you find that out of these segments, let's suppose M or N were also reportable on the basis of results. So you show it on the basis of results, provided your assessment is correct. Yeah. And once you have assessed that as your reportable segment on the basis of this criteria, you don't need to check it again on the basis of assets. Why? Because any of the criteria has to be met. Please remember, it's any of the criteria. It's not all of the criteria. Clear? Yeah. Sonu then I think is asking for one illustration on page 1.105. I can understand your illustration now, but I think time is not available. So I'll just make a note of your illustration and we can discuss this in the next session. Pooja is saying this session is on Sunday. Yes. So this coming Sunday we have one session. No, Mahima. So I think in your schedule this Sunday would have got added. You can check it again. So this coming Sunday we have a session at 4 p.m. Yeah. So with this, thanks to all of you once again for your time today and for your wonderful participation. And please remember the homework. You need to complete the homework before we meet next. Vinod is asking, sir, we need to check any segment is passing either any criteria instead of check. Yes, any of the criteria you need to check. So if a segment passes any of the criteria, that will become reportable. For example, R did not meet the criteria as per SS. Correct? Still we went to the next criteria and we checked it. And because it passed the criteria as per results, we call it as reportable. And that's why we are saying all are reportable. Clear on this? Yeah. Okay, so now Ria is absolutely clear. Yes, next lecture is this coming Sunday only, 4 p.m. Okay, so thanks to all of you once again. Thanks so much. Yes.